Types of mutual funds, Part 1. Okay, suppose you want to travel from Mumbai to New Delhi. That's a long journey, and so your travel agent gives you options of different modes of transportation that you could use to get there. So he lays out the route, the time it takes, and flexibility of each mode for you. And now, it's up to you to decide which mode suits your pocket, time and comfort the most. Well, reaching your financial goal is pretty similar. Once you know your end goal, how much time you have to reach a goal, what level of risk you're willing to take, and what flexibility you desire in terms of liquidity, there are tons of ways to get there. But obviously you want to find the most optimum and suitable option, and the only way to do that is to understand the different types of mutual funds that are available in the market.
So, let's break down the different types of mutual fund schemes to simplify this. If an investor's biggest concern is liquidity, then it's best to consider mutual funds as classified into two broad categories, open-ended and close-ended. While the fund management principles in the two will be similar, the operational feature of liquidity is different.
Think about the way you save your money. In your savings bank account, you can deposit and withdraw any amount, and the account stays active even after withdrawing some money. On the other hand, the fixed deposit account you open needs a certain amount to be invested for a certain period of time, and you may not be able to take a small amount out midway without incurring a charge, or in most cases, terminating the same. Similarly, the open-ended mutual fund is like your savings bank account, and the close-ended is like a fixed deposit.
Exactly. An investor can start investing in an open-ended mutual fund scheme by investing a minimum stipulated amount and opt for further transactions like additional investments, redemption, transfer, etc. any number of times, making it as easy to operate as a savings bank account. A close-ended fund, in comparison, operates like a fixed deposit, making it much less liquid or convenient. The scheme remains in operation for a certain period of time, after which it matures and money is returned to the investor. Another difference between the two types of funds has to do with the way an investor buys and sells the two. Close-ended funds have to be listed on the stock exchanges from where they are bought and sold. Also, the market price of the units of close-ended funds are normally offered at a discount to the prevailing NAV.
There's more. Because your close-ended fund units can be sold only through the stock exchanges before its maturity, you must do that in the demat format. Remember, you may retain the right to hold the units in the account statement form. However, you won't be able to transact through stock exchanges, only wait until the scheme's maturity.
But hold on. There's a third type of mutual fund, interval funds. Combining the features of both open and close-ended schemes, these funds are open for investment or redemption during predetermined intervals.
So just like you would assess which mode of transport to choose for your journey, depending on rigidity of your travel plan, you can assess from the three types of mutual funds here, based on their liquidity, what suits your objective better. If liquidity is not the biggest concern on your plate, there are more classifications of mutual funds you can refer to.
Some go by the type of assets they invest in, such as debt or fixed income funds that invest in fixed income securities like treasury bills, government securities, bonds, and securitized debt. There are equity funds that invest largely in equity shares or companies and equity-related investments. And then there are hybrid funds that are a mixture of debt and equity. We have separate videos explaining in detail the different options available within these fund types.
And it doesn't stop here. Watch part 2 of this video for more types of mutual funds based on the way the schemes are managed and various other new age mutual fund schemes. It may seem like a lot, but it's simpler than you think. And understanding the different kinds of mutual funds is key to choosing the right one for you. We hope you've enjoyed watching this video. Watch more and we'll help you learn about different investing concepts. You can also write to us with your feedback at editor@templeton.com.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.